Hey everybody, Darren Boros here. Today I'm in Cabo San Lucas, Mexico, and I want to walk you through the process on how I was able to buy my very first rental property. This is probably the question that I get asked most often. How did you get into real estate investing? What was the first property you bought? And how can I buy my very first property and get involved in real estate investing? Because it's really about getting you on that path. The first property is often the most difficult one to buy. So once you buy that first property, then you start to feel more comfortable with real estate investing and you start working your way towards financial freedom and financial independence. And that's really what it's all about. It's no mistake that I'm in Mexico right now and traveling for the next 2.5 months while the Canadian winter is going on back home. And my real estate investing has been the vehicle that's allowed me to be able to do that. So I want to show you how I was able to do this so that you can start on that same path. And maybe you don't have the same goals as I have. Maybe you want to be able to put your kids through school or go on amazing vacations or retire early. Whatever that thing is for you, I want you to start thinking about how you can get there and how you can get there sooner. And you got to make that first step and buy your very first investment property. Before we do that, if you can hit that like button below, that would help the YouTube algorithm. You can also subscribe to my channel, and please feel free to leave comments or questions below. I will definitely answer those comments and questions that you have. And if you'd like to share this video with somebody else that might find this video helpful in terms of buying their first investment property, you can also do that. So without further ado, let's get into it. The first property I ever bought was back in 2002. In 2001, I spent the entire year working over in Japan. I worked at Universal Studios in Osaka, Japan in all of 2001. And the great part about working in Japan was they paid for all my living expenses. Now, they gave me a bicycle and a train pass and a gym membership. We also got a per diem. I got my salary. And at the end of the year, if we completed our contract, we also got a bonus from our salary. None of that was big money by any means, but I was saving my money as best as I could because I wanted to be able to buy something when I got back to Canada. And I'll tell you what, a lot of my friends made fun of me when I was over in Japan. They used to say I was a little bit frugal. I would bring my lunch some days to work where they would go to the cafeteria and buy something, and they would go out for dinner every single night, and I would eat at home like at least 3 or 4 nights a week. In retrospect, when I look back on it now, I'm so glad that I did that, because here's the reality of the situation. I just used my per diem for everything that I wanted to buy, and I went on trips while I was there. I went out, I had fun, I went to dinners, I bought a couple things like a new camera and a new stereo, and I did all of that on my per diem. And my salary, I never touched my salary through the whole year. And at the end of the year, I also got a bonus, and I got paid in US dollars, and I brought that money back to Canada, and the exchange rate back at that time was very favorable for the Canadian dollar. When I got back to Canada at the end of that year, I essentially had about $80,000 in savings. And I looked at how I wanted to be able to invest that money. And really the only thing that I knew that I wanted to do was buy real estate. And I didn't have any experience in real estate. I don't come from a real estate investing family, but I knew I wanted to buy a property. I also knew that I didn't want to spend all that money. I didn't want to spend the entire $80,000 on a property. I wanted to only spend about half of that money. I didn't want to spend it all. So I started to look at, and the first thing I looked at, and this is the first thing that you're going to want to look at too, is where is this money going to come from? Because there's an expression in real estate that we have to have money to make money, and that's absolutely true. The part that they don't tell you is you got to have money to make money, but it doesn't necessarily have to be your own money. In my case, I had my own money, and so I was able to use that to be able to buy my first property. But I know a lot of people that get into real estate investing with what we call OPM. That's other people's money. That could be a joint venture partner. That could be parents or friends or relatives that are lending you money to be able to go out and buy your first property. So it doesn't necessarily always have to come from us, but I did that in my case. I had the money. I wanted to be able to invest in my very first property. But first step in the process is planning and budgeting, and where is that money going to come from, and how much of that money do you want to spend? So after I figured out kind of how much I wanted to spend, then I started looking at which markets I wanted to invest in. And I was living in Toronto at the time. I started to look at some condos because that was really the only thing that I could afford. In 2002 in Toronto, I was looking at condos right downtown. For those of you that know the Toronto market, it was like Yonge and College, which is like the heart of downtown, and 600 square foot condos were going for around $200,000 at the time. I thought that was crazy. I thought, why would anyone spend $200,000 on 600 square feet? Yeah, I wish I'd bought 20 of them because they're probably worth about $800,000 now, but I digress. Anyway, it doesn't matter. Retrospect is always 2020 when it comes to the real estate market. I started to look at that market and realize, you know what, this is a lot of money and I'm going to be what's called probably house poor if I buy a $200,000 condo, because the majority of my money that I had saved would have been going into the purchase of that condo, and then I still had to be able to afford the monthly payments and things like that. I decided to look elsewhere, and this is something that I think I did well, I did right, is that I looked at a market that I could afford versus the market that I wanted to live in, because those are two very different things. The market that I could afford, and one that I knew very well, was the Alberta market. That's where I grew up. I grew up in Red Deer, Alberta. So I decided to go and look at that market in comparison to the Toronto market. For a 600 square foot condo in Toronto, I was looking at about a $200,000 investment. A single family dwelling, owning the land and the property and everything in Alberta, in Red Deer, Alberta, was about $125,000 to $135,000. For me, it was a better investment at the time. It seemed like it made more sense, and it was more affordable. It was something that was not going to stretch me too thin, and I felt like I really was able to do that. Now, I would suggest focusing on markets that you know relatively well. So for me, I was living in Toronto, so I knew that market well. I grew up in Alberta. I knew that market relatively well. And specifically, I knew Red Deer really well. I knew street by street. I knew the good areas of town. I knew the not so great areas of town, the areas that I wanted to avoid. That's the second step in the process, is figuring out where you want to invest. And you'll want to get really local. You'll really want to look at the demographics of the neighborhood, what kind of people are living in these properties, and what your future tenants might look like as well. So those are all the things you want to start to look at when you start to look at where you want to invest. After I picked Red Deer as my market, I decided on what kind of property I wanted to buy. And I'd love to say that I really had my mind open about this. I didn't really know any different. I was like, okay, it's a single family dwelling. That's all you can really do. And I was looking at basically a whole bunch of variations of a single family dwelling. I was looking at townhouses, I was looking at single family dwellings, or I was looking at a half duplex, still one single unit. That was what we call one door. One door means there's one revenue to support that one door under that one roof. If I could have done this over again, I probably would have looked at something a little bit different, but at the time, that was all I kind of knew, so I decided to go ahead and buy that one door. Not that there's anything wrong with that. I know people who've been very successful buying single family dwellings and condos, and that's all they buy. But I think knowing what I know now, I would have made a slightly different decision. But at the time, that was all I really looked at. But when you're looking at what kind of property you want to buy, there's all different kinds of properties. There's duplexes, triplexes, fourplexes, 6 units and above. That gets into multi-unit or apartment investing. And then your financing rules change. So there's all kinds of different things that you can do as a real estate investor, but don't limit yourself to looking at one certain style of property. When I started to look at the Red Deer market, I started to look at mostly new properties because there was a lot of inventory in terms of things that were being built at the time. I looked at a couple different things. I looked at a townhouse, a brand new development. I looked at a brand new single family dwelling. But what I settled on was a brand new property. I came back 4 months later and the property was complete. It was a beautiful little 2-bedroom bi-level. The property cost me $130,000. And how I thought I was going to make that a successful transaction is I thought, I'll buy that property and I'll finish the basement. So it'll be 4 bedrooms, 3 bathrooms, and then I can rent that out for a lot more money than a 2-bedroom, 2-bathroom. That's another part of your budgeting and the amount of money that you want to spend, because I also had to look at, what was the renovation going to cost? So not only was it the down payment and the closing costs and all of that, but I also had to look at, what was the renovation going to cost? And that's the next step in the process. After you figure out your budget, after you figure out where you want to invest, you figure out what kind of property that you want to buy, then you start looking at how do you buy that property? Then I started to create my team. Your realtor, your mortgage broker, your lawyer, your accountant, your property manager, your home inspector, your contractor, and your insurance broker. Those are all people that are part of my team. In this case, the first person I needed was my mortgage broker. So I had to go to a mortgage broker and say, can I qualify for this property? He came back, he ran his calculations, he looked at how much cash I had, what my credit was like, looked at all those things, and came back and said, yes, with a cosign, we'll be able to get you that loan on the property. Obviously then, in order to get the mortgage, I needed to prove I had insurance, so I found an insurance broker. My realtor, I didn't really use a realtor on this transaction because I went to a builder. So builders often have, sales centers, and they'll have people that are dedicated to them. They are real estate agents usually, but they specifically work for the builder. So I didn't necessarily need a realtor, but I needed a lawyer for sure to close out that transaction. I didn't need my accountant at that point. I definitely use my accountant more now that I have multiple properties, but at the time I just, filed my tax return and I owned that property in my personal name as well. So it wasn't hugely complicated. I ended up contracting the property myself. I was a 25-year-old kid. I was excited to get in there and learn all about this renovation stuff, and I did some sweat equity, and I learned how to hang drywall, and I did a little bit of tile work, and I did some painting, and I hired some of it. I did some of it myself, but it cost me $20,000 to finish the basement at the time. I didn't need a home inspector because it was a brand new property. There was nothing to inspect really. And the other one that I didn't necessarily need at that time was my property manager because I was planning to manage the property myself. You want to start to assemble your team, and then in the area that you're investing in, if you can, find people that are specifically catering their businesses to working with real estate investors, because they're going to be able to help you move your business forward just that much faster. Once I figured out that I could buy the property, I could get an approval, I figured out where I wanted to buy, what I wanted to buy, and my budget, now I started to look at the numbers. This is so important that you look at the numbers. I started to look at what were the rental rates in the area, what could I rent that property for, what were my expenses going to be. I didn't really know how to calculate cash flow properly at the time. I thought you just looked at, your mortgage, your property tax, your utilities, and your insurance, and anything above and beyond that was positive cash flow. Yeah, kind of it is, but it's not really, because there's 4 other things that I would add now for sure. One would be vacancy. It's not a matter of if your property is going to be vacant, it's when. So you want to account for vacancy. Property management, whether you're managing the property or somebody else is managing the property, you've got to look at what the costs are on property management. Repairs and maintenance. I didn't really have a whole lot of repairs and maintenance for the 4 years that I owned that property because it was brand new. But if you're buying an older property, for sure you want to look at, okay, what's it going to cost if I'm going to have to replace the hot water tank or the roof, or all those things fall under repairs and maintenance. The last thing that I include always is gifts for my tenants. I give my tenants about $100 of gifts per tenant per property per year. I include all of those things now in my cash flow calculations. At the time, I definitely did not include all those things. So I probably would have been in negative cash flow if I wasn't managing the property myself and I hadn't bought a brand new property. But that wasn't the case. I was managing it myself. I was looking after the property management. I didn't have a lot of repairs and maintenance. So I was in positive cash flow. It wasn't huge cash flow, but I did have some cash flow on that property. If that property hadn't have cash flowed, I would have walked away. Because it's an investment property, you want to make sure that it's not an emotional decision. When you're buying a property to live in as your principal residence, now you start to fall in love with that property. But when it's just an investment, you want to look at it from the numbers perspective, and the numbers don't make sense, you got to walk away from that property. There's always another property coming along the line. So don't be afraid to walk away if the numbers don't make sense. There was definitely a lot of wins on the first one, a couple of things that I did wrong and that I would do over again if I could. The thing that I'm most proud of is that I got into the market at 25 years old. A lot of people my age were not buying property, and not buying investment property especially. So I was super excited that I was able to do that, and I'm so glad that I did. It really set me up for the rest of my life. I was able to take that one property and parlay that into 2 or 3 properties within a couple years, and that really got me on this sort of train with real estate investing, and I got really excited about buying properties and having tenants and using this rentals and having passive income. And the more of these that I did, the more experience that I got. It was a success for me. I'm so glad that I did it, and I hope that you have found something out of this video that you'll find that is going to inspire you to be able to get out there and buy your first investment property. With that, I'll say thanks so much for watching. I wish you the best of success on your real estate investing journey, and I look forward to hearing your success stories very soon.